Welcome everyone to Best in Interest. This is Shane, and it is that time of the month again. We are exiting another month. June is quickly coming to an end, so we're going to take a look at the three stocks I am looking to add to my portfolio in the month of July. Actually, they are existing positions, so I'll be looking to continue to build them out. Lennar, Comcast, and Occidental. Oxy here. You've probably heard of Comcast and Oxy for the last several months here, and they continue to be what I consider fairly valued or undervalued, really undervalued for both, and Lennar as well. This will be a new position actually in the portfolio. I do not have any shares currently, but we'll see how many we can get in the month of July here. So let's jump in. Before we get too far in the video, if you could do me a big favor, hit all those buttons down below. It really does help out a small YouTube channel like mine with the YouTube algorithm. Hit that thumbs up if you find any value in the content. Make sure you subscribe. Click that subscribe button. Join us on this journey to financial freedom. Join the Best in Interest community. Hit the notification bell as well so you're notified whenever I put out any new content. There is the thanks button for anyone who wants to help out the channel financially. That way you can buy me a cup of tea. Special thank you to the viewers and subscribers of the channel. You people are awesome. The channel continues to grow because of people like you. Let's get the channel to 2,000 subscribers, and I'm only going to get there with your help. So doing all of those buttons there, liking the videos, watching to the end, and sharing with anyone that you think that might find value helps as well. So again, thank you to everyone who's taking the time to do that. All right, first on the list is going to be Lennar. This is a home builder out of the consumer discretionary sector. Lennar Corporation, ticker LEN.B. It is their B shares, and I'm going to be completely honest here. This one is one in Warren Buffett's portfolio, and there is another company or another stock ticker LEN for Lennar. And the only reason I went with LEN.B versus the LEN is this is the one Warren Buffett went with, and I'm sure he's smarter than I am. This is one I've been looking at for a while now. At $105.32, it is in my buy range, and it is under 15% of a 52-week low, so I like that. And all of the numbers we're looking at here will be as of the close of business on Friday. Earnings per share is at $12.13 per share. Current price earnings ratio is low at 8.44, $8.44. A little bit higher forward P at $11.87. Dividend is $2. Which is a 1.9% dividend yield. They are a quarterly payer. Ex-dividend date was April 23rd, and actually it looks like their next ex-dividend date is going to be July 3rd with a July 18th payout. So if you buy them before July 3rd, on the 2nd or before, I'm going to go in probably on Monday. This will be one of the first moves I make, add to this position, and this is a new position, so it'll be my first shares. And if you do that before the 3rd, July 3rd, you'll get the payout on the 18th. All right, the 52-week range as low as $94.09, as high as $168.25. And I did look at Berkshire Hathaway's 13F. Their cost basis is right around $101 to $102 per share, $101 and some change. So right now it's currently a little bit above what Warren Buffett was picking it up at, or someone on his team. It does have a high beta, 1.35, so it is more volatile than the overall market. Analysts do call it a buy. Price target of $140.33, which isn't quite back to their 52-week high of $168.25, but it is, about $35 higher than where it currently sits, and that would represent a potential 33.24% increase from the current stock price. Earnings date of June 16th, so we just passed that. You can go back and look at their earnings report if you're interested in that. Jumping over to the right, I like to look at their 5-year dividend yield average. 1.4%, and compare it to their current that's called dividend yield theory. According to dividend yield theory, this one is potentially undervalued because their 5-year dividend yield of 1.9% is, or I'm sorry, their current dividend yield of 1.9% is higher than their 5-year dividend yield of 1.4%. Payout ratio is very low on this at 16.57%. We went over the ex-dividend date here a second ago. Return on capital employed, I like 10% or better here. They're at 13.13%. EPS growth, I like 5% projected over the next 5 years or better. They're at 5.93% with a revenue growth forecast at 5.56. Free cash flow, I want growing free cash flow, so let's take a look and see if there's is. Going back to November 2022, $3.2 billion in free cash flow. November 2023, $5 billion. Looks like a downturn in 2024 to $2.2 billion there. Trailing 12 months at 1.5, but keep in mind we're only in June of 2025, or about to enter July. So some of these numbers are still 2024 numbers. Now they are repurchasing shares, pulling shares out of the market. Going back again to November 2022, 1 billion, a little over, in shares repurchased. 2023, 1.1 billion. 2024, 2.25 billion. So I don't know if that accounts for the downturn in free cash flow. Might account for some of it, but may not be all of it. But they did increase their repurchase of capital shares in 2024. Looks like they're maintaining that trend in 2025. That's what trailing 12 months will include 2025 numbers plus some of 2024. So Lennar, I did not list my position because I don't have one in Lennar yet. It will be a new position in the portfolio as we add to it in July. All right, Comcast. Now this is a existing position, and I have been adding to this one throughout the last several months. I've held it for a couple years now, several years now, but I've really been adding to it recently in the $33, $34, $35 range. It's still under my cost basis, so I am going to continue to do that. We're talking about Comcast Corporation, ticker CMCSA. This is out of the communications sector. Closed out the week at $35.32, a little bit further down in the after hours. Earnings per share at $4.07 per share. Current price earnings ratio low at $8.43, even lower forward PE at $7.77. Dividend is $1.32. Divide by 4 because they are a quarterly payer. Dividend yield is 3.82% currently. Ex-dividend date, July 2nd. So you would need to buy them on July 1st to get the July, or hold them on July 1st to get the July 23rd payout. 52-week range as low as $31.44, as high as $45.31. They are just off their 52-week low, not very far away. A beta of 0.95, so they are less volatile than the overall market, just slightly. Analysts call this one a consensus buy as well. Price target of $43.16. Again, not quite getting back up to its 52-week high, but upside from where it currently sits. Potential of 22.2%. Earnings date, July 31st. So we're going to see that here coming up in the next couple of days. Tune in for that if you're interested. Jumping over again, I like to look at dividend yield theory to see if the company is potentially undervalued. To do that, we look at their 5-year dividend yield average of 2.53%. Compare it to the current, or forward right here, forward annual dividend, 3.74. It says 3.82. Here, this information is from stockanalysis.com. This information is from Yahoo Finance. A little bit of a mix between the two. I do recommend more than one source so that whenever you're seeing differences like this, you can go to a third source potentially and see which one is accurate. But they're pretty close, 3.82, 3.74. Either way, both of them are well above the 5-year dividend yield average, which again speaks to potential undervaluation. Another one with the payout ratio low at 30, a little bit higher than what we saw with Lennar, but still very low. I like under 75%. They're at 31.03. Return on capital employed, again, I like above 10% here. They're at 10.28%. EPS growth, again, I like 5% projected or better over the next 5 years. They're at 7.22%. Revenue growth a little bit lower than what we saw with Lennar at 1.17. Now, jumping over to the free cash flow, again, we want growing free cash flow. So $12.6 billion December 2022, December 2023 up to $12.9 billion. December 2024 looks like a little bit of a downturn to $12.5 billion, and trailing 12 months at 13.4. But again, we're in the middle of 2025, so part of trailing 12 months is going to include 2024 numbers. Another one pulling shares out of the market, $13.3 billion in 2022, $11.2 billion in 2023, and $9 billion in 2024. So there definitely was a downturn in free cash flow since they not only saw a decrease, but also decreased their repurchase of shares. Now, I don't think this is actually my current position. I have a few more shares than this right now, but my bank was down, so I could not get into my recent one, but it's pretty close to around 320.22 shares. Down slightly. I don't think I'm down this much either. I think I'm down about 10 or 11%, but either way, still down below my cost basis, right in the $39 range. I actually might have dipped it below 39 down to 38, but maybe it's right in the 39 range there. Again, this is actually last month's number, so I do have a few more shares here than what this is showing. All right, Occidental Petroleum Corporation, ticker OXY. Again, this is one I've been adding to over the last several months. Continues to be down below my cost basis. Want to take advantage of it while it is down. Another one that is in Warren Buffett's portfolio. And I was buying it a lot cheaper than he was. He was buying this one in the 50s, even in the 60s. Now, he did pick up some in the 40s, but his cost basis is in the 50 range, low 52, 53, somewhere in there, 52 to 53. I think it's $52 and some change. So quite a bit higher than mine at $47.35. And you can get it right now cheaper than Warren Buffett bought it. Currently, or at the close of business on Friday, $42.60, down a little bit more in the after hours, $42.56. Earnings per share, $2.47 per share. Price to earnings ratio, $18.38 per share. Forward P a little higher at 18.72. Dividend is 96 cents, another quarterly payer, so divide by 4 with a starting dividend yield of 2.09%. Actually, forward dividend, according to the Yahoo Finance, 2.25%. They got them a little higher. Ex-dividend date, June 10th. We are past that. They are going to pay out on July 15th. So if you held them on June 9th or before, you will get the July 15th dividend. I'm looking forward to mine. Should get it in there. Usually I get to see it the next day, not the day it pays out. 52-week range as low as $34.79. If it dropped down and back into the 30s, I'd continue to buy it. As high as $64.76. Beta of 0.85, so less volatile than the overall market. Analysts call this one a hold, though they see some upside potential at $51.33 projected price, which would represent a potential 20.49% upside. Earnings date coming up in August on the 6th, they claim. Now, again, looking at dividend yield theory of their 5-year average, 2.46%. We compared that to their current 2.25%. This one actually, according to dividend yield theory, says it might be potentially overvalued right now. So you may want to wait for it to get down into the 30s before you buy it. That might put it back into undervalued territory. I'm going to continue to buy it because it is below my cost basis. Again, I'm down about 13%, but another one, I have more than 244 shares. Couldn't update this part of it. So this is last month's numbers. So I think I'm not quite down at 13% because it was at $40.78 when I was buying it last month. It's at 42, so that's probably around 10 or 11% down right now. But I am down, so I want to bring down my cost basis and continue to add to the position. Now, return on capital employed on this one, it is under the 10% I'm looking for, so I'd like them to get this squared away, do a little better on the return on capital employed. Now, earnings per share growth, just the opposite. I like 5% or better forecasted over the next 5 years. They're at 17.39%, smoking high. They did not list revenue growth. Going back again to free cash flow, December 2022, $12.3 billion in free cash flow. Here's where it drops significantly. December 2023 down to $6 billion. December 2024, another drop down to $4.4 billion. Trailing 12 months looks like they've leveled out around $4.4 billion, but again, keep in mind we're in end of June, almost July, so a lot of the trailing 12 months is 2024 numbers still, at least about half. Repurchase of capital shares, yep, they're pulling shares out. $3 billion in 2022. 2023 saw 3.4, only 27 million in 2024, but it looks like they're continuing that trend over the trailing 12 months at 27 million. But I'm going to be a broken clock, or repeating myself. I mean, not a broken clock, but a parrot repeating myself here over and over that, again, the trailing 12 months does include part of 2024. So around 244 shares, down around 13%. I think it's around 11 or 12%, but because the price, whenever we looked at it last month, was at $40.78. All right, those are definitely not, even though the market has really rebounded significantly, those are definitely not the only stocks that I still see that are fairly valued to undervalued. Owens Corning I added to this week. I feel like that one's undervalued right now. Pfizer I added to a little bit here last week as well. General Mills not in my portfolio, but it looks undervalued, and actually I think it recently set a new 52-week low, or is right up against their 52-week low. Union Pacific I would say probably close to fair value. Genuine Parts Company right around fair value, if not a little bit undervalued. Alphabet, Google, same thing. I would say right around fair value, maybe slightly ever just teeny tiny undervalued, but not quite like it was back in the 150s. Chevron I would say is undervalued. ExxonMobil, for that matter, is not on here, but that one looks like it's right around undervalued or fair valued. Cisco, I think anything under 72. It might have snuck up into the 74 range, but it's still not very, it's definitely not overvalued, fairly valued maybe. NextEra Energy, anything under 72 for that one as well, around 70, 71. I like it in the 60s. If it dropped back into there, definitely fairly valued to undervalued right now. Vale, I think, is undervalued. Leidos is another one I think is around fair valued to undervalued. And HP Hewlett Packard here is another one that's dropped recently that I think is undervalued, might be worth a look. Let me know some companies you think that are fairly valued. there are definitely some out there. Even though the stock market has really rebounded, you can always find undervalued stocks in the stock market, right? It's a market of stocks. That's why they call it the stock market. You don't go into the grocery store and just buy, well, you might go into the grocery store and just buy one item, but there's more than one item in there, and you can always find a sale, right? That's the idea behind the stock market. Find the stocks, the sectors that are out of favor, and when they are out of favor, that's when you want to be adding to them. That's my goal here. That's what I try to do. That's why I focus on a lot of stocks at or around or below their 15% of their 52-week low. Usually that's a good place to start. Even some stocks, whenever they're setting new 52-week lows, if the company's still good and maybe it's bad news, there's a war that broke out, something like that, that's for energy stocks, oil and gas specifically. It seems like if there's a bad storm in the Gulf or where we have any kind of oil production, it impacts oil prices. So sometimes stock price gets disconnected from the fundamentals of the stock. And when the fundamentals are still good and the stock price is disconnected and it's undervalued, or at least what you believe is undervalued, there's no way for us to ever know for sure. But you can, pretty accurately assess the value of a business, divide that assessment by the amount of shares, and figure out what around fair value of a company is and how much you should pay for the stock price. All right, let's get done with this one here. Well, that's really it. I think I'm going to head out to the pool. I got some friends over here in a little bit. We're going to do a little barbecuing. I hope you're having a great Saturday afternoon. And as always, appreciate stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. What stocks are you adding to your portfolio, existing positions, or are you picking up any new positions as we enter into the month of July? I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Again, hope you are having a great weekend. And don't forget to tune back in tomorrow morning, Sunday morning. I will hit you with my portfolio update for the week. Any options I was in, dividends I received, what I bought, anything I sold. And I didn't sell anything actually this week. But I did hit into some options, and you'll find out how those played out tomorrow in that video. So don't forget to come back, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.